It's traders, it's Paul here from StrobotUltimate.com. Going to talk about a new trading stop system we have installed, and I'm going to talk about it. It's pretty cool and how it works. So there is trade where we stop if the trade gets close to the target. We'll move the stop right up behind it. We go say for 50 pips if it hasn't happened yet, but we've got another thing in there. So in your Strobot Trader settings, you can set a percentage, Expert Advisors Properties, and I'll show you what it does. This percentage there, it says 5% lock-in. Basically what it means is that that percentage is the percentage of your account balance. So if you've got £1,000 account balance, just a small account, then 5% of that is 50 quid. So if you're trading 0.5 for instance, this is, I'll just drop this on a chart so it's set up for the default. So if you're trading 0.5, £50 would be quite a good 5% of your £1,000 balance. So when any trade hits £50, basically it starts using a trailing stop. But it doesn't work like a normal trading stop, because a normal trading stop stays at a certain position behind the price, whereas this trading stop works very differently. And I've done a little Excel spreadsheet to show you. I'm just going to find it. Where is it called? Excel. No, I've got such a cluttered computer screen. Where is it gone? Oh, there it is. Excel. So this is a demonstration of the trading stop. So at 0 is where the price entered, and the blue line is basically the price moving up. Okay, I know it doesn't work like that normally. Okay, but you'll notice that what happens is when the blue line, the price gets to 5% of your balance, the trailing stop comes in halfway between the open and the entry, and then moves up half all the way up. So what that means is as the market loses momentum, the trailing stop gives more space for it to move, because obviously as it loses momentum it's going to bounce around more. So to give you an example, if I just pull up my charts, this one here is a live trade that we're in right now. And you can see the market's moved up. It's hit 5% of the balance of the account. This is one of the live accounts I've got free. This is just like the test account I run tests on. So and you can see the stop has been moved halfway between the price and the entrance. Okay, so that means I know that I've got that guaranteed money safe, and as the price moves more into my as a percentage of the balance, it will move the stop up behind it. And obviously if it comes back and stops me out and knows that I've got a certain amount of money. The idea behind that is to lock in sorry, a certain amount of money per trade and then build on that as we go along, especially in markets that are a bit choppy or anything like that. You aren't going to get some trades. Let me show you one that we had last week where we stopped out in profit. What actually happened, this is GBP JPY, and so our entry's just here. You can see where that red line is, and then where the blue line is, where that cross is, and it stopped out up here. You can see that it's quite a choppy market. It in fact goes into a bit of a flag. Then there's a second signal here to take it to the target, or close to the target. It doesn't actually make it up there. So what it does is it's a way of locking in money, and it's actually based on poker. So I won't explain how because it's too complicated, on a methodology used in poker. So but it will help us to capture a good amount of money. We've had some really good trades last week. One trade that we failed on, we had, the Robot places entry orders 5 pips above where it's signal, because what we found is that if the price is going to change direction, it does at that point. So if we put a 5 pip above the entry, then what happens is we had one trade last week, for instance, it took, in fact, I think it's this one actually. If you look at where this entered, look how long it takes to actually go anywhere. The actual trade, I think, was actually entered about 7 hours before or something like that. This trade here, that's it. It was entered it was actually back here. The entry order was placed back here, and it actually took the price there. You can see how it's above that. But the problem happens at 10 o'clock at night UK time when the spreads go very high. So what I've done is I've made it so that if there are any pending orders at 10 o'clock at night, it closes them, because 9 o'clock at night, or whenever the robot decides it can't trade because the spreads have gone high, it closes any pending orders, so we don't get caught in a pending order that shouldn't be triggered because the spread's gone high. So then triggers it, and then spread goes back to normal, and you're miles away where you entered. So we want to keep clear of that sort of thing. So all the pending orders are closed before 10 o'clock at night UK time, and then it can generate new pending orders for the next day. That stops us also having any pending orders that hang around because the price went against us. Also, there's another thing if it's got a pending order on and the price does go below the stop, even though or above the stop if it's selling, and the market has not, even if the order hasn't triggered, the order will be closed. So we don't want to end up with masses of pending orders. It's not very helpful, and so the market gets a chance to take our trades, but if it doesn't and rejects that price, then we stay out of the trade, which is what we want to do, and gradually build up our portfolio of trades, 2 or 3 trades at a time, not trading against ourselves. So we don't take a euro dollar and a dollar Swiss, for instance, because obviously you're trading the dollar twice, so you don't want to do that. You're not going to help yourself. It's better to trade, say, not risk your margin in the same markets. So anyway, there we go. So I hope you have a really good trading week, and that's me. StrobotUltimate.com is the website. That's the latest update. Have a great day.